watching Prime Time. I'm Tamanna Inamdar. Let's take a look at the headlines this evening. The race for Essar Steel is down to just two. ArcelorMittal and New Metal emerge as the final bidders for the company, but there may be more to the New Metal bid than what meets the eye. Retail inflation moderates in January while factory output slows down in December after a significant rise in November. It's a new week and a new start at Dalal Street. Markets rebound after a tepid finish on Friday. Nifty Sensex gained nearly a percentage. Singapore Stock Exchange says it's going to launch its own India product after the National Stock Exchange snaps the pact between the two. Foodpanda looks to keep pace with Zomato and Swiggy, plans to invest 400 crore rupees to scale up its delivery network. And Congress President Rahul Gandhi attacks RSS Chief Mohan Bhagwat for his comments on the Indian Army, says Bhagwat's speech is an insult to every Indian because it disrespects the army. Now the big story, it's a two-way race for Essar Steel, ArcelorMittal and New Metal Mauritius. A special purpose vehicle which has a Loya family connection have put in final bids for the assets. Vishwanath Nair now joins in with all the details right on cue. Vishwanath, tell us about the story.
So Tamanna, as we all know, this process has been going on for a very long time now. August is when this case got admitted under the Insolvency and Bankruptcy Code, and the NCLT has since been appointed, a resolution professional, Satish Kumar Gupta, and he's been conducting the whole insolvency process in this. The bidding process has been going on at least for a few weeks now, and earlier today at 5 o'clock was when the closing of this bidding process happened. Many names had come up earlier when the expression of interest stage was going on, but finally only two people have bidden. One is a proxy for the promoter himself, and the second is somebody from outside this country, ArcelorMittal. So the New Metal Mauritius, which is an SPV that is floated in conjunction with VTB Bank. VTB Bank owns about 40% stake in the SPV. It is currently promoting this SPV. There's also a 30% stake that is held by SSG Capital. It is a stressed asset investor based out of Hong Kong, and the remaining 30%, as our sources are telling us, is held by a trusteeship wherein Revant Ruya, the son of Ravi Ruya, he's one of the founding partners at Essar. He is a beneficiary of this SPV. That is what our sources are at this point in time telling us. There's also a statement that was put out by New Metals earlier today, wherein they claim that Revant Ruya is a minority shareholder. But of course, these details will get clarified as these bids are opened and people assess, the possibility of one becoming better than the other. So that is going to be a process that is going to take over the next 3 to 4 weeks, and people are going to look at, various aspects: how much money is being put up, how much money is being asked to take as a haircut, what kind of deferred payment schemes these people are proposing. All of this will be looked at by the lenders, and then a possible winner will come up by April. That is what our sources are like at this point.
There's another twist in this story, isn't it, Vishwanath? Something you've been reporting on, which is an acquisition of a part of the company that New Metal is trying to make simultaneously.
Yeah, so Orissa Slurry Pipeline Infrastructure Limited, it is a company that currently controls this 253-kilometer long pipeline which transports raw materials from an iron ore mine to the iron pellet factory that Essar controls. This pipeline was originally 100% owned by Essar. In 2015, they entered into some kind of a sale and leaseback arrangement with a fund that is promoted by the Shrey Group in Calcutta. Now, what happened was, 2016, the lenders started to oppose this deal. They said that the benefit of this deal was that Essar would have been normalized as a standard account back in 2015, but the Reserve Bank of India would not give them that benefit. So the deal makes no sense. So why don't you back out of the deal? Now, Orissa Slurry Pipeline Infrastructure, they backed out of the deal without actually taking Shrey's approval. And because of this, there's this whole issue of ownership that has come up. In the Calcutta High Court, Shrey has filed a petition stating that it owns this pipeline and therefore it should be allowed to take a call on what happens with this pipeline. Of course, that is still going on, and the Calcutta High Court has put in an injunction, a status quo sort of a thing in that matter. And now it's said that Shrey Infrastructure is trying to sell this 70% stake that it holds to New Metal Corporation. Now, it's important to see here, because New Metal, if it ends up owning this pipeline, will control the sort of flow of raw material. This pipeline controls about 50% of the raw material that the plants use.
So the lifeline, basically.
Essentially the lifeline, yes. So if one bidder controls the lifeline of the whole process, then the whole process is pretty much pointless, right? Because then the other bidders stand no chance. So, that this is an issue that is currently cropping up. The lenders have already said that they're going to fight this. They're going to put up some kind of a legal obstacle so that New Metal doesn't end up controlling this pipeline. So that's something that we will watch now. So
why the story is so crucial and its larger impact also, because it is also a commentary, or it's an example of what is happening with this entire NCLT process and resolution process. This is one big example. Yeah. And to talk more on this, we have with us former MD and CEO of Bank of India, BP Sharma, joining us, as well as Alok Dheer of Dheer and Dheer Associates. Thank you so much to both of you. Mr. Sharma, I'll come to you first. What do you make of these developments? Let's begin with your comment on the two bidders for the assets of Essar Steel.
Well, I think last time also this issue was raised in a different context. It is like this. I have taken 100 rupees loan from bank. The account is NPA. Then through a third party, so-called third party, I pay 30 rupees and take over the asset, and my loan is reduced from 100 to 30 rupees. Now this is something that is not acceptable.
Right, Mr. Sharma, this is Vishwanath Nair. Just wanted to get some sense, this question of the promoter coming in and trying to bid for the asset, that has been raised many times. But, on the other side, you have somebody like ArcelorMittal who's bidding for this asset. Now, ArcelorMittal had recently sold its stake in Uttam Galva for 1 rupee, or at least that is what the media reports have suggested, to get out of the asset so that they are no longer connected with a stressed asset. But do you think it's that easy that you just sell off your stake and then be eligible for any bidding?
See, this timing of sell-off is definitely raising question. It gives the impression this sell-off took place only to circumvent the restriction under the law.
Right, sir. So, sir, also the point about this whole, slurry pipeline and the ownership of that, and, when you have a part of the infrastructure which is so crucial to the working of the plant and for the turnaround, obviously, do you think that probably lenders should have insisted from the beginning that this be part of the whole Essar Steel asset rather than raise their voices now when the sale is getting closer to completion?
Thank you for taking me to 2015. I happened to be the MDCO in June when this was turned down by Bank of India. Beyond this, I would not like to comment.
Sure, sir. Sure, sir. No problem at all. But also, on a general note, when you have assets which are crucial to the turnaround of the main asset, do you think that they should all be clubbed together, as part of the resolution process, or do you think that that is a call that has to be taken with each individual case?
No, it depends on 2-3 factors. Whether that particular asset, which may be very crucial for the project, is financed by the bank. If not, whether the asset is in place before the loan for the main project has been disbursed. If an asset is acquired later on by promoter, which is crucial for the project, but from their own source, legally and technically, probably bank cannot ask for a charge on that.
All right. Let's get in Alok Dheer into the conversation as well. A very good evening, Mr. Dheer. What do you make of this situation? There are two suitors right now for Essar Steel. One is being looked at as sort of a representative or has some stake of the original owners, and ArcelorMittal is the other option.
Yeah. See, according to me, insofar as Essar Mittal is concerned, it's been very clear that they were hit by 29A as well. So they are trying to purge themselves of the ineligibility by selling off their stake in Uttam Galwa. Insofar as the other transaction is concerned, as we are all aware, that there is in the new metal Mauritius, there is a family trust who is also one of the shareholders, and one of the beneficiaries of that trust is Mr. Revant Ruya. So in both the transactions, there have been questions which have been raised, and purging of the ineligibility is taking place. As I said, with Essar Mittal selling the shares of Uttam Galwa, and insofar as the Essar deal is concerned, the new metal transaction is concerned, in the transaction structure which has been devised, where there are three, so to speak, three shareholders insofar as new metal is concerned, and one of them being the trust, it is not hit by the simple language of 29A. There is no provision in 29A which excludes shareholders and trusts to make them ineligible, and a beneficiary of a trust in any case is not somebody who would fall within the ambit of section 29A. So according to me, the new metal Mauritius bid is certainly not hit by any criteria of ineligibility. Insofar as the Essar Mittal bid is concerned, as has been very rightly pointed out by Mr. Sharma from Bank of India, if somebody has done something at the last minute of trying to circumvent the law by saying that I have now purged myself of the ineligibility because I've sold the shares, will it be looked at as a circumvention of the law, or he will be allowed to bid now that he does not have the ineligibility, is something that we'll have to wait and watch.
Question of this whole, slurry pipeline and the possibility of that slurry pipeline, being the most important part in this puzzle. Essentially, there was a injunction by the Calcutta High Court in this matter about the ownership of this pipeline, right? So, do you think that it's possible for somebody under this injunction to just sell off their asset, and especially in this case, because new metal, considering there is some indirect or long way off connection with the original promoters, do you think that could probably raise some questions?
Yeah, let me put it like this: the entire IBC is actually being looked with very morally colored glasses on the one hand, and matter of conveniences for the banks on the other hand. So you can't have situations. There's a new law. It's a very strict law. A lot of disqualifications have been provided within the law, and consequences to promoters, etc., are all enshrined in the enactment now. Now the attempt is to continuously extend the scope of that for the convenience of the creditors. Now, we must understand that enactments are prepared for balancing rights of shareholders. It's not merely because the banks feel that they can make more money if they bring in the assets of a distinct corporate entity which has its own list of shareholders, which has its own lenders, which has its own assets. So these are not matters of convenience that you should be able to drag everything in just for the benefit of one stakeholder, while completely ignoring the rights of all other shareholders and corporate structures which are built. Again, as Mr. Sharma has very rightly pointed out, it was for the banks to look at the stage when these assets were being created, that if they were so integral to the asset, they should have been covered within the same corporate entity. But that was not to be. It was also earlier discussed that during the transaction, it is the banks who were persuading the Essar Group and Shrey to transfer the asset from this entity, that is Orissa Slurry Pipeline. They wanted to sell this particular entity because the banks wanted to fulfill their own convenience at that time of trying to say that let us get the better benefit of provisioning. But when the RBI refused to give the benefit of provisioning, they again turned back and said, now we want to bring the asset back in. These are very complex matters of law and of contract. Having entered into transactions at various points of time, the consequence and implementation of the transactions will find their own way, and courts of law will take calls. And insofar as the status quo order is concerned, clearly the status quo is with respect to the transaction, and clearly if transaction has been executed between Shrey Fund and New Metal, it would have taken care of the fact that there is no contempt of the court and the transaction is not such which is violative of the status quo order.
Sure.
One will have to examine the order carefully and clearly, and one will have to examine the transaction which is being executed. And I can only say that at such transaction levels, with such stakes in hand, supported by law firms on every side, I would imagine that it would be really impossible to imagine that somebody has committed a contempt of the court and violated a status quo order.
Mr. Sharma, just one broad question. Can bankers in this case, and broadly speaking, afford to be too picky? There are, of course, clear guidelines to not create a moral hazard by letting those who may have defaulted in the past again gain access of those assets. But in the current case, can bankers really be as picky, looking at how limited the options seem to be?
Well, that is definitely a tricky situation, but it all depends how much money the banks lenders are going to get back as a percentage to outstanding. So that is a very bigger question. And the second question is, the haircut the lenders will be taking, what happens to the entrepreneur? He goes scot-free. These are the two broader issues, not particularly in this case, but in all other cases that are coming up. These are the issues which will have an impact on the recovery climate in the country.
All right. Thank you so much, BP Sharma and Alok Dheer, for speaking with us this evening on Bloomberg Quint. And moving on to the other big story today, the data that has come in. Consumer price inflation moderated slightly in January as vegetable prices began to cool off, keeping inflation within the RBI's target band. This comes after the central bank warned of upside risks to inflation in its recent monetary policy review. CPI inflation stood at 5.07% in January. Food prices inflation fell marginally to 4.7%, while prices of pulses and other products softened for the 14th straight month. Meanwhile, IIP slowed down in December after a significant rise in November. IIP came in at 7.1% according to must-be data. November growth was revised higher to 8.8%. Chief Economist Advisor at State Bank of India, Soumyakanti Ghosh, joins us now for more on this data. How do you look at these numbers, sir?
I think these numbers were in line with our expectations, and specifically the IIP number is a very pleasant surprise, and we also expect that the growth in IIP will continue in the next month also, because there are some obvious green shoots in the economy. Commercial vehicle sales, for example, have expanded by more than 36% in January. And the credit growth is now at a 5-year high. If you look at the incremental credit growth, that is at a 5-year high. And the most important thing is that if you look into the credit growth data from December or November, you will see that the credit growth to the MSME sector have jumped by 5 to 6 times than what it was in November. So this indicates that the disruptions due to the GST are also, and we can look forward to some exciting numbers on the IIP front.
Let's talk a bit about inflation, Mr. Ghosh. How do you see interest rates moving after these numbers are coming in? What's the direction that you're seeing?
See, I think the CPI numbers broadly were in line with the expectations. I think they were marginally lower than what we were expecting, and the trend have continued in February also, if you look at the first 10 days. So the February's number also will be on the lower side. I think it could be lower than this number. So taking these factors into consideration, I think apart from some downside surprises in the month of May and June, where the inflation rate could potentially move up to 5.6 or 5.7%, I think more or less the inflation will be under control. And regarding the MSP impact everybody is talking about, I think that is something which you need to watch out for. But my sense is that this will not have a significant impact on the inflation because market prices are still depressed.
All right. Thank you so much, Soumyakanti Ghosh there, speaking on this CPI and IIP data which came in earlier today. And State Bank of India posted its first quarterly losses in 17 years and an NPA divergence of around 23,000 crore rupees, which we reported on Friday. The stock took a hit today, but Rajneesh Kumar, the bank's chairman, says he is confident of not reporting an NPA divergence for the current financial year. Kumar also expects the bank's credit to grow at 10% in FY19.
Basically, if it is, one is that gross slippages next year, our estimate is 2%. And there are like 78,000 crore of NPAs in NCLT 1 and 2. So by September, this will be out of the bank's books, either through recovery or you write down or whatever you do. But that part will be over. Our estimate is 10%, which I presume is a feasible number for State Bank of India. And so better quality credit at a price which is liking of the State Bank of India. And still, I believe that we will be able to grow at around 10%.
And Indian markets rebounded in trade today. Both the Nifty and Sensex eked out gains of a little less than a percentage point. Neeraj Shah sums up the day's market action now in this report.
Truncated week, but that failed to dampen the spirits of the bounce back bulls, if I can call them that, because we did very well in the session today. Maybe off the highs of the day, but still ending about 0.8% in the green. And the broader markets did very, very well. So mid caps and the small caps actually doing a lot better. The small cap index almost double the quantum gain of the headline numbers. So what did well and what didn't? Let's first look at what did really well. Results impact for Tata Steel, and the steel space in particular, SAIL and a couple of others also had a fairly good run. So that pocket has been doing rather well. I think private financiers participated in the session today. So everything from a Yes Bank to an IndusInd Bank, which is up about 3%, 2.5%, 3%, to heavyweights like the HDFC Twins, and even supported by Reliance Industries as well. So about a couple of percentage points for Reliance Industries. HDFC was up about a couple of percentage points. HDFC Bank not doing too badly. So private financials certainly supported the move in the session today. SPI had a slightly dampened move that dragged the Nifty PSU index down a little bit to end flat on a day when the Nifty Bank did well. Though I must say, Bank of Baroda more than made up for it, 8% higher in the session, and good volumes as well, both on the FNO side and the cash market side for BOB. So good going there for BOB as well. Some losers, and there were few really, and which is I'm starting with the losers first. Kitex down about 14% post numbers. Fortis Healthcare has been the eye of a storm and down in session today as well, about 6.5% lower. But look at the gainers. Ahead of results, J Kumar Infra about 14%. I think the tire stocks had a fabulous run too. So those will come up on your screen. Good going there. JK Tire and CR about 7.5%, 4% higher. And a clutch of other mid-size, small-size names, the likes of Aptech or a Precision Wires or some others did very well on a day when the index did well, but the broader markets performed marginally better.
All right, the Singapore Stock Exchange has decided to drop its own products reflecting Indian equity markets. This comes after SEBI barred Indian exchanges from sharing their data with foreign exchanges. Sajid Mangat is joining me now for more on this story, and a story he's been tracking very closely over the last couple of months. What is SGX trying to do over here? Make sure that it holds on to that market?
Yeah, that's right. If you look at SGX trading today, the stock went down nearly 7 to 8%, primarily because of this notification which came on Friday. If you look at the revenues of SGS, nearly 4% of its revenues come from Indian products, and that's what is SGS trying to protect here, because SGS has come out with a release on Sunday evening, and it said that it's trying to bring out its own set of Indian basket of products because NSE would have withdrawn its licensing by August 2018, and it wants to maintain continuity for all its global clients. Now remember, a lot of trading happens on Nifty futures on the SGX, and as a result of which a lot of open interest is built up. A lot of foreign portfolio investors are trading through the SGX market or Singapore's exchange market there, and that's what is prompting the exchange to ensure that there is some continuity. It doesn't lose out that volumes, because
how will they do it without the data?
That is a big question here, because SGX has come back and said that they will be collaborating with NSE with respect to the Gujarat IFSC in Gujarat or the GIFT City. Now I don't know whether it will work or not, because GIFT City has been very slow to start with, but if you look at some of the features which have been provided to GIFT City, it gives all the incentives to foreign portfolio investors. Now, if you look at the 5 taxes which Urjit Patel talked about on capital, those 5 taxes are not available or applicable for any investor coming into the GIFT City, whether it's MAT or whether it's long-term, short-term capital gains, dividend distribution tax, STT, CTT, stamp duty. All 5 are not applicable there. So it may gives them the incentive, or transaction cost is hardly any except for the brokerage they pay to the entities, and that gives them enough. But whether the volumes will migrate from Singapore to India or to the GIFT City, it's something which we need to see, and whether they will be able to attract that kind of liquidity into that market, because FIs would come into the market only if there is enough liquidity there, and that liquidity has to be generated. So both exchanges will have to work towards creating that liquidity, or make a market for that kind of liquidity here, and then only it will pick up. But that's something which we'll see in the next 6 months when they when the trade starts to unwind in Singapore.
Perhaps give GIFT City that big, much needed push.
It's a big bet, and I think the government is betting on that GIFT City will take off.
All right, thanks so much for that, Sujit. Now, turning to the pharma space, the US FDA is paying a visit to Sun Pharma's Halol plant. If cleared, it will pave the way for the drug maker to launch some key products in the world's largest market. Yatin Mota gets us all the details in this report.
US FDA, America's drug regulator has, being invited by Sun Pharmaceuticals to re-inspect their Halol unit. Remember, last year the company had received a warning letter as far as the Halol plant was concerned, post which the approvals for major filings done from this plant, saw some big delays. Of course, the kind of pipeline Halol has, since it's one of the largest, facility that Sun Pharma has, and more importantly, the kind of drug filings that it has from the Halol unit is, the largest their Taro business. So clearly, as far as the US business is concerned, key of their drugs and approvals are pending. And if re-inspection takes place successfully for this Halol plant, which the company said, they have undertaken all the remedial measures, could open up a whole new marketplace for the company's new drug launches. So clearly, all eyes as far as Sun Pharmaceuticals' Halol unit is concerned, and so sources do indicate that probably in the next 7 to 8 working days, the inspection should get completed, post which there could be more clarity as to what exactly happened, as far as the entire inspection success is concerned.
Well, Indigo has got a big problem at hand. The engines of some of its new aircraft have turned out to be faulty, forcing it to ground 3 of them. These are the Airbus A320 Neos. The country's largest commercial airline put out a statement over the weekend claiming that there were 3 instances when pilots decided to abort takeoff after the engines shut down. Anurag Kotoki of Bloomberg News sums up the developments.
Pratt & Whitney engines have been in trouble since the day they were launched. Over the past 18 months or so, there have been several issues. But on Friday, the European Safety Union actually announced a fresh kind of an issue which started all of this. And Indigo yesterday said that it had to replace its engines 69 times in 18 months because those engines were not up to the mark. So now what we know is that deliveries for all new aircraft has been suspended, which are fitted with the Pratt & Whitney engines, and we don't really know when this issue can be fixed. In the meantime, what Indigo will have to do is to lease older planes, the A320 CEO model, which is not as cost effective as the new models were. So we'll have to see how Airbus and Pratt & Whitney address this situation, but Indigo definitely has some trouble in its hand.
Well, a lot of people have been talking about WhatsApp payments, but difficult to really find it on your phone. Alex Matthew says he has a fix. Alex?
Well, that's actually a problem that I was faced with earlier today. And we're, of course, talking about WhatsApp payments. That's the service, the payment service that WhatsApp launched just a short while back. And it was launched as a beta for few users. Now, what I found out was that if you find somebody who is already subscribed to that payments option, and if you ask that person to try and send funds to you, then it so happens that you have the option of payments within your settings that shows up subsequent to that. Now what happens if you select that payments option in the settings that shows up both on your iOS and on your Android application, you will be led through a number of steps. Starting with the selection of a new account, you will be asked to accept the terms and conditions, of course, that WhatsApp has, after which you will have to send an SMS to WhatsApp. So you'll have to verify your number using an SMS. You will then be led to a number of bank accounts or a single bank account, whichever be the option, that is linked to your number. You select that bank account, and then you will have to verify the debit card that is linked to the account. An OTP will be sent to your mobile phone. You'll have to select or key in the UPI PIN of your choice, after which you'll be able to transact on WhatsApp with whoever else has subscribed to the payments option. Now, of course, WhatsApp after a while will in all probability roll out this application or the payment service to everybody who has the application. There are a few requirements here though. You have to have a mobile or rather a bank account that is linked to the mobile phone number that you are using, and also from the terms and conditions that WhatsApp has stipulated, you need to be above 18 years of age. We'll have to see how that pans out and the various services that could possibly be added on to this service. As it stands right now, it is primarily a peer-to-peer system, which essentially means that it allows you and me and various other people, of course, to transact within themselves.
Well, Food Panda India will spend 400 crore rupees to hire 25,000 riders and improve its online food delivery network. The fresh investment comes after Swiggy raised $100 million from Naspers and a Chinese e-commerce service platform Meituan Dianping, and Alibaba's group and financial pumped $200 million into Zomato. Nishant Sharma gives us a picture of how the food delivery scene is heating up.
Well, online food delivery platform Food Panda India today said in a statement that it is going to invest about 400 crores in order to scale up its delivery network within the country, and as it looks to strengthen its position in a market where it competes with giants like Naspers-backed Swiggy, Alibaba-backed Zomato, and Seattle-based giant Uber Eats in India. Now, this fresh investment also comes just 2 weeks after Ola acquired Food Panda India in an all-stock deal. At the time of acquisition, Ola had mentioned that it is going to infuse about $200 million in Food Panda India as it looks to strengthen its position and scale up its operation within the country. Now, apart from building a robust technology solution for its partners, Food Panda India said that it's going to hire about 25,000 riders in the next 12 to 15 months as it looks to double down on its delivery network across the country. Now, this fresh investment also comes just a week after Swiggy announced that it has raised about $100 million from Naspers and China's e-commerce giant Meituan Dianping, and just 2 weeks after Zomato raised about $200 million from Ant Financials. So clearly, all the top three giants in India's food tech industry, be it Zomato, Swiggy, Food Panda India, are flush with funds to take on each other and to become the dominant player in the India's food tech industry.
Now, arguments in the Judge Loya case continued in the Supreme Court today. The Maharashtra government, represented by former Attorney General Mukul Rohatgi, said the petitions seeking investigations into the death of Judge Loya lack material and are based solely on news reports. Arpan Chaturvedi, who has been tracking the case closely, sums up all the court action in this report.
Well, Senior Advocate Mukul Rohatgi was representing the government of Maharashtra and started the argument for them. His basic premise or his arguments were that this is a petition which is bereft of any material. It is based on just news reports, which are news reports are not considered evidence by in law. That was his argument. Apart from that, he also said that the petitioner, he questioned the locus of the petitioners and said that these are filed with oblique motives, and this is not an act that is done for sympathy or in interest of the judiciary. So these were some of his arguments. Apart from that, of course, he said that he believes that all these petitions petition should be dismissed with exemplary cost, because he said that four High Court judges who were with Judge Loya at that time, their testimony makes it very clear that there is no foul play, there is no suspicion, and that there is no reason to doubt or question the statements of these judges, because of course that they have no axe to grind and they were always on good terms with Judge Loya. So on basis of that, Mr. Radgi said that these petitions the government of Maharashtra believes should be dismissed.
Now, the Supreme Court today restrained the Jammu and Kashmir police from taking any coercive steps against army officers involved in the Shopian firing. Last month, Lieutenant Colonel Karamveer Singh had asked the Supreme Court to cancel an FIR against his son, Major Aditya Kumar, who is accused of killing 3 civilians in Shopian. The Supreme Court has stayed the order and asked the state government to file its response to the plea within 2 weeks. And the Council of Lieutenant Colonel Karamveer Singh reiterated that the FIR is bad in law.
It was bad in law because, the people who had actually indulged in anti-national and terrorist activities, the actions that mob had taken, that mob had become the stone pelters, and it went to the extent of the JCO that he had gotten down to reason with the crowd. That JCO was sought to be lynched, his weapon was snatched, there was injuries, serious injuries to soldiers. And when retaliatory action is taken by the Indian Army soldiers and officers to protect the property, life and limb of the officers, then an FIR is registered, not leaving aside those people who are actually perpetrators of these heinous offences.
And Congress President Rahul Gandhi attacked RSS Chief Mohan Bhagwat for his comments on the Indian Army. Gandhi wrote on Twitter, and I quote, "The RSS Chief's speech is an insult to every Indian because it disrespects those who have died for our nation. It is an insult to our flag because it insults every soldier who ever saluted it." And some more reactions coming into the comments made by Mohan Bhagwat.
I think it's beyond the RSS's jurisdiction to comment on military. It's not their business. It should not be within their charter, and it's an extremely irresponsible statement. Please understand that when you're in public life and when you're at the helm of affairs of an organization like the RSS, which does have, a certain number of following, your statements do have an impact on people's mind and people's consciousness. It can hurt the sentiments of Indians. It definitely hurts the sentiments of the Indian Army. You have to be more responsible. And I'm going into history because history is important. This is a repeat of history. They have had a history of not respecting the founding fathers of our country. They have a history of not respecting the Constitution. Mr. Shri Bhagwat, even in his speech, spoke about the Constitution, that if the Constitution permits. So what is he trying to allege? That the Constitution should be amended, will be amended? And the timing is so unfortunate, given that's what's happening in Jammu Kashmir, and given what's happening every day in terms of ceasefire violations. How can you make such an insensitive remark?
Yes, you have problems with defense preparedness, but ultimately defense and warfare is an extremely, extremely professional business. It is a professional business. It is a technical business. It's a very high-tech business. So, of course, there is no role for whether it is the RSS or your neighborhood watch guys going and, marching towards the border with Pakistan. That is completely out of the question. But I would like to use this, and I hope more of us use this as an opportunity to discuss about defense preparedness in this country. Of course, there's a delicious irony to the whole thing, right? The delicious irony is that if we read it as a commentary on defense preparedness, Mr. Bhagwat's party, his political wing of his party, is in power. So then the question is, what has the BJP done since 2014 in terms of improving military preparedness and the overall security situation in this country, including Kashmir?
Now, the Rajasthan government has announced a one-time loan waiver of up to 50,000 rupees for small and marginal farmers. This move would cost 8,000 crore rupees to the exchequer. Chief Minister Vasundhara Raje also announced the setting up of a farmer loan relief commission. Farmers can approach the commission and present their case for getting relief on a merit system. The Congress has criticized the move, calling it a betrayal to farmers. Ahead of the budget speech, Congress and BJP MLAs sparred in the assembly, demanding withdrawal of the law, which seeks to enhance the level of immunity to public servants and prevents media from publicly naming them for a probe. And India and Oman have signed 8 agreements, including cooperation in defense, health and tourism. The two countries also signed an agreement on mutual visa exemption for holders of diplomatic, special service and official passports. Prime Minister Narendra Modi today met with industry leaders of the Gulf and West Asia region at the India-Oman business meeting. PM Modi pitched India as an attractive destination for business. External Affairs Ministry spokesperson Ravish Kumar tweeted out this information. And as the deadline for linking numerous services to Aadhaar draws nearer, the UIDAI has said that no essential services or benefit like medical facilities, school admissions or rations could be denied because someone didn't have an Aadhaar. But is that what you experience every day? We'll be talking about that after this very, very short break. Up ahead on Primetime Debate. Do join us. Nikhil Kumar and Ritika Khera will be joining in on that debate.